Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Tuesday, December 19th, 2023. Let's jump into the charts. I'm going to jump right to it. This is the big picture, by the way. We always start with the big picture, and work our way into the day itself. It is the longer term undercurrents that sort of dictate, obviously, the longer term trends and the path of least resistance. With respect to big moves, we are presently testing a big area. On the weekly chart, 262.71 is the channel top, 255.70 is an inside channel, the same angle of descent. It is a band of resistance between 255.70 and 262.71 that we pushed into actually on Monday and backed away to close below, that can continue to contain buying pressures not only for the week, but through January and into the later first quarter. From here, we can fall back. I don't know if we have it properly illustrated, but I can show it here on this daily chart. This band of channel resistance is based on a trend line that is presently in the lower 180s and dropping. And as we test this area, this channel bottom in the lower 180s and dropping should be considered in reach over the next 3 to 5 months. That is the big picture. Now, there's no clear sell signal at play. It's just that we are testing a big area of resistance that is sellable. If you've been long since, for instance, this buy signal above the speed line that played out about 5 weeks ago, that is now well below the market at 196.42 and inconsequential, but it was a buy signal at that time in middle of November that set up this objective. There was a bit of a head fake about 4 days ago to the downside, as you recall, last week actually, but we are right back to expecting this area the very following day. And so here we are. This is an area, 255.31 to 260.92, that can contain buying through January and quite possibly into later Q1. And from here, this is sort of the 2 to 3 week downside, 230.04 in reach over the next 2 to 3 weeks, possibly sooner, and over the next 3 to 5 weeks, 209.74. That is the big picture. And so as we're testing this area, if you've been long, you could consider exiting, taking some profits, possibly all profits, until we happen to actually close above 260.92, or rather I should correct myself, 262.71, because this very same channel top on the weekly chart is 262.71. But working our way down from here, now that we've tested it, 230.04 is considered a realistic, I'm going to say 2 to 3 week target. It could be perhaps by the end of next week. And by the end of January, we could fall all the way back to 209.74, where we could bottom out through February, back up to channel resistance within 3 to 5 weeks of that. We could fill in this 260.92 to 209.74 area roughly for the next couple of months. That is a real possibility. Now, working our way down, I don't expect to see this today. 238.51 is a new rising 1/3 speed line. I say new because it's based in part on Monday's high, using the October low as the means by which we create this trend-defining line study. Trend-defining by one measure, but I do like channel structures a little more, especially when their angle is softer than the speed line itself. Softer angles are typically more reliable by a degree than steeply rising line studies. But getting back to the day itself, holding below 255.31, which is once again on the weekly chart at 250.70, will keep 246.29 in reach, possibly today, where we can bottom out on an intraday basis. And I'll just say that if we close today below 246.29, we should this week, within a few days, test 238.51. where a daily low can be placed. Now, I will also say that 238.51 is probably not a bad 3 to 5 day swing trade attempt. Talking to 3 to 5 day swing traders who may have actually gone short at the 255.31 area roughly on Monday. And if you're holding out for a level, and if you're just a 3 to 5 day, let's say, swing trader during the week, and you don't really hold positions over the weekend, understandable. 238.51, I think, is your next downside objective. where profits can be taken and long entry made 238.51 and climbing daily. We could round back up here into the mid 250s or low 260s again within 3 to 5 days of testing 238.51, which is one of the reasons I consider 230.04 to be more of a 2 to 3 week target than a 1 to 2 week target, because I'm allowing for the market to bottom out nicely from perhaps more than a day at 238.51. A closing below 238.51, not going to happen today, does set up a 230.04 target tomorrow, where we could bottom out through next week, round back up into the mid 250s, low 260s within a week or two of doing so. Finally, to the downside, a settlement below 230.04 would signal 209.74 within another week or two, where, as I said before, we could bottom out through February, and from that point rally back to this band of channel resistance, 255.31 to 260.92. In terms of, are we going to test this low 180s channel bottom anytime over the next few months? The answer to that is yes. If we close below 209.74, then it's probably just a 3 to 5 week play to the downside, but no sense in going there. I do, though, want to reiterate that holding below this 255.70 to 262.71 region on the weekly chart does allow this market to fall all the way south to channel support, presently in the low 180s and dropping weekly. So keep that in mind for you big picture traders. Now, if we do close this week, Friday, above 262.71 by the full 1% margin, that's a 265.33 settlement of Friday or higher, I do see longer term bullish continuation to the 346.49 rising channel top that is based on the January low. So it's a nearly 1 year channel top that I would expect probably within 3 to 5 months of closing above 262.71 on Friday by the 1% margin. In the interim, if we rally today, for instance, and manage to close above 260.92, I do see 278.45 as a realistic 3 to 5 day target. And 278.45 is nothing more than, if you recall, this 1 year channel bottom that we settled below about, 2 months ago or so. We can retrace back up to it. It can contain weekly buying pressures. As I've said in a recent video, we could close above 262.71, test 278.45 within 3 to 5 days, fall back into the low 260s by the following week. We could trade inside of this ever-widening wedge for 2 to 3 weeks following a settlement above 262.71. But if you're looking for the big picture, I do think closing above 262.71 on Friday by a 1% margin of 265.33 does point to 346.49 and rising as a realistic 3 to 5 month objective. So if you went short, you bought out of the money puts and all that stuff, as we're playing right now, we're testing long-term resistance. So if you bought out of the money puts, I don't have an argument with that at all. In fact, that is what that's what you're supposed to be doing right now, right? If you're a two-sided trader and you trade options, I'm not saying that all of you should have been buying out of the money puts. Don't get me wrong. I'm talking to the options traders who do trade regularly both sides of the market. So if you've done that, or if you've gone short Tesla, whatever the case might be, if we close above 262.71 on Friday by a 1% margin, you should exit all that. And in fact, reach for perhaps 350 or 360 or 370 out of the money calls that don't expire. I would go a full year out on that expiration price, because I think it'll take the better part of 6 months to reach those strikes. And so there is that. I don't think there's anything else that needs to be said. I'm going to leave it at that for Tuesday's Tesla Report. Please click like, share, subscribe, check out wickedstocks.com. Take advantage of that 5-day free trial. You won't regret it. I'll talk to you soon. You have a great day.